Yeah. Now we'll solve one sum. We'll write a journal entry for some for 4 5 transactions. Let's see. The first transaction, they started business with cash rupees 10,000 and furniture rupees 15,000, building rupees 15,000. Right? Building rupees we'll write 12,000. Okay. Okay. Yeah, we know the debit credit rule of real account, nominal account, and personal account. We know the examples: land, building, machinery, furniture, stock. Examples of real account or properties of the business. And golden rule and debit credit rule of real account is what comes in debit, what goes out credit. And we know the nominal account. Nominal account examples. So it deals with the expense and losses like a salary paid, rent paid, interest paid, like that. And income is dividend received, rent received, interest received, like that. And debit credit rule will be all expense and losses should be debited, and all incomes and gains should be credited. And personal account means it relates to the persons, Ram, Sham, like a Tata, HDFC Bank, and all, like that. And debit credit rule is debit the receiver, credit the giver. These are the three accounts examples and debit credit rules, right? Now we'll see one transaction. What is the transaction here? They've started business with cash rupees 10,000 and furniture 15,000, building 12,000, right? So I told you in the previous class, first we have to write debit. First we have to write debit. If you want to write debit, we have to check according to real account. According to real account, when do you write debit? What comes in? What comes in means if any asset is coming into the business, that you have to write debit, right? Here, what is coming? What is which asset is coming into the business? See, so cash is coming into the business, right? So they is starting business with cash of rupees 10,000. Hence, we can write down this date transaction. We assume that 1/1/2025. We assume the date, and we have the business received cash from the Dev. Dev is the owner of the business. Hence, we can write down cash account debit. Okay, now what is the amount? 10,000, right? So this is over. Next, we have to check some more assets are there, some more properties are there. Furniture is also what comes in. Furniture is coming. Hence, we can write down furniture account debit. How much? 15,000. Then, so one more asset is we are receiving one more asset. What is the asset? Building. Building account debit. What is the amount? 12,000. Right? Next, is there any asset which is receiving by the business? No. So all we have written. Then we have to write credit. See, according to real account, when we have to write credit, what goes out? So with this transaction, any asset is going out from the business? No, we are not getting answer in real account. So as we know that if you are not getting answer in real account, we have to check according to nominal account. According to nominal account, when we have to write credit, all incomes and gains. We know the examples of incomes and gains: dividend received, interest received, rent received, like that. So in this, there is no income. In this transaction, there is no income. Then we have to check according to personal account. According to personal account, when we have to write the credit, so credit the giver. Who is giving money? Dev. So you can write down Dev. Dev is giving for what? Capital, in the form of capital, right? So hence we can write down Dev capital account, right? So here Dev capital account is a personal account. Okay, so we can write the narration like we have written 3 debits and 1 credit will be there. So we have to write the total amount. How much it is? 10,000 plus 15,000, 25,000 plus that 12,000, 37,000 credit, right? So we have to write the narration being business started with cash, furniture, and building, right? So this is the narration of that particular transaction. This is the second transaction. What is the second transaction here? On 3rd January 2025, stock purchased from Somesh on credit rupees 3,000, right? So what is the date here? 3rd January 2025, right? Yeah, we know that we have to check according to first real account. According to real account, when we have to debit, what comes in? What comes in means any of these assets, land, building, machinery, furniture, stock, or cash is coming with these transactions. We have to write the debit. What is coming here? Stock is coming here. Stock is coming in the form of purchases, right? Hence, you can write on stock account or purchase account. Purchase account debit. Okay, yeah, debit is over. Now we have to write the credit. So if you want to write the credit, we have to check according to real account first what goes out. Anything is going out from the business? No, we have purchased stock on credit, so we are not getting answer in real account. Then we have to check nominal account. According to nominal account, when we have to write credit, all income sign gains. So we know the examples of income sign gains: dividend received, rent received, interest received, like that. So like that, no income is there in this transaction. Then we have to check according to personal account. According to personal account, when we have to write credit, credit the giver. So who is giving the stock? Somesh, right? Hence we can write down to Somesh account, right? What is the worth of the transaction? 3,000. Okay. So what is the narration? Being stock purchased from Somesh on credit. On credit, right? So this is a transaction. Yeah, now we'll see the third transaction. So on 5th January 2025, paid rent rupees 2,000, right? We have paid rent. Okay. So now we have to check according to first real account what comes in. Any asset is there which is coming to the business? No, we are not getting answer. No asset is coming in this transaction. Next, according to nominal account, we have to check. According to nominal account, when we have to write debit, all expenses and losses, right? What are the examples of expenses? Salary paid, rent paid, interest paid, wages paid, telephone bill paid, electricity bill paid, like that. So in this, any expenditure is there? Yes. What is the expenditure? Rent. Hence, we can write down rent account debit. So what is the amount? 2,000. Okay. No? Yeah. Next. Next we have to write the credit. If you want to write the credit, we have to check according to real account. According to real account, when we have to write credit, what goes out? So if any of these assets are going out from the business, we have to write credit. So here in this, what is going out? Cash is going out. Okay, na? Cash is going out. Hence, what goes out? Credit means what is going out? Cash is going out. You can write down to cash. Cash account 2,000, right? Narration is being rent paid. This is a narration, right? Yeah. Yeah. Now we'll see the fourth transaction. On 10th January, stock sold to Ratan on credit rupees 6,000. Means we have sold the stock to Ratan on credit. We have not received the cash. This is a transaction, right? Now we'll check according to real account debit. What comes in? In this transaction, is there any asset which is coming in? No. We are not receiving cash. Then we have to check according to nominal account. According to nominal account, all expenses and losses. We know the examples of expenses and losses. So salary paid, rent paid, interest paid. So no expenditure is there in this transaction. Next, we have to check according to personal account. According to personal account, when we have to write debit the receiver, right? Who is receiving the goods here? Who is receiving the benefit? Ratan is receiving. Hence, we can write on. So Ratan account on 10th January 2025. Ratan account debit. What is the amount? 6,000, right? Now we have to write credit. If you want to write credit, we have to check according to first real account. So according to real account, when we have to write credit, what goes out? So in this transaction, is there any asset which is going out? Yes. Stock is there. Stock is going out from the business. Hence, we can write down to stock account, right? If you write stock account also correct, but stock is going in the form of sales. Hence, we can write down sales account. 6,000, right? Narration is being stock sold on credit, right? This is the narration of this transaction. Yeah, next, fifth transaction is on 12th January 2025, interest received rupees 500, right? So in this, what happened? Business has received the interest, 500 rupees interest the business has received. Now we have to write journal entry for the first. We have to write debit. So if you want to write debit, we have to check according to real account. What comes in? What is coming into the business? Cash is coming in. So hence we can write down cash 500 rupees is coming in. Hence we can write down cash account. Cash account debit 500 rupees, right? Now then we have to write credit. So if you want to write credit, first of all we have to check according to real account what goes out. Any asset is there which is coming, which is going out from the business? No. Next, according to nominal account, when we have to write credit, all incomes and gains. We know the examples of incomes and gains: dividend received, interest received, rent received, like that, right? So here we have an income. The name of the income is interest. Hence we can write down to interest account. 500, right? So narration is being interest received. Second transaction is over. Yeah, now we'll see the sixth transaction. On 15th January 2025, pay telephone charges rupees 200, right? So this is the entry. Like business has paid telephone charges rupees 200. So first we have to write debit. If you want to write debit, we have to check according to real account debit. According to real account, what should be written? So when we have to write debit, what comes in? So any asset is coming in with this transaction? No. Then we have to check according to nominal account. According to nominal account, when we have to write debit, all expenses and losses, right? So we have a expenses, telephone charges, right? So telephone charge, like a salary paid, rent paid, interest paid, wages paid, telephone charges paid, like that. It is also an expenditure. So hence all expenses should be debited. So here we have to write telephone charges account debit. Debit, right? So what is the amount? 200. Okay. Next. Then we have to write credit. If you want to write credit, as usual, we have to check first according to real account. According to real account, when we have to write credit, what goes out? Any asset is going out from the business, right? What is going out? Rupees. Cash is going out. 200 rupees cash is going out. Hence, so like you can write to cash account. So 200 rupees. Okay. So narration is being telephone charges paid. Right? This is a narration. So this is the date is 15th January 2025. Thank you.